I'm live. Okay. Let me bring the trading view page. Let me see if I can. Let me see if I am on. Yes, it's working. Uh, so it was a big news day today. The news was about PPI, CPI, all those stuff. Price index came around 830. It was pretty bullish. Like didn't do much, but still, before that, I would like to mark the highs and lows. The 4 hourly low and 4 hourly high. These are the 4 hourly high, and this was the equilibrium. Oh, no, this was the equilibrium for the down. So, okay, so and this was London low, 3 o'clock. Yeah, this was London low, and this London high. Okay, this was London high. Okay, and the news came around 8:30, which was like kind of bullish news. Actually, it is not a bullish news, but the numbers looks much better compared with inflation. All trading were going on, so the number looks okay. So market reacted positively, and 8:45. Our Powell was speaking, but did not do much. It just took this fair value gap and reacted. And market opened here. Market opened, yeah, market opened here. So what happened when market opened? It was a break of structure to upside. It's already a break of structure, so it's not a break of structure. But after market opens, it's break of structure to upside. So it's a pretty good point. And also, this is the point stop resistance. Like we can say stop resistance, or this is the low. So what price could do? Price could come all the way down and take this low and go back because it's a bullish news. So normally what I think when I thinking about the this how I decide my daily bias. So first I will think what is moving the market. Okay, this is my first question. Is it external or internal confluences? So today it is external because it's a news. It's external confluence. My you know sorry for my spellings, but it's external confluence that is news, and it is bullish, and it is bullish. So normally what is bullish? Is bullish news, so market will go up. But what we need to think about, because it's a pretty good news and it's already reacted, so these lows are protected because there is a very fair chance price could come and take these lows because on this news is to these lows, these 5 minutes lows. Maybe if we check the 1 hour, is it 1 hour? No, say 5 minutes lows, 50 minutes lows. You know, took these lows and reacted very fairly. So that means this is already taken. There is a very fair chance market could go. and take this loss. But there is a high chance market could come to this low because this is a protected low. So many people will put their stop loss here or here because this fair reaction on this fair value gap. So many people could put their stop loss here. Okay, and also this is one. So in this scenario, because market already showed that it's gonna go up by reacting this news. So in this scenario, normally what happened? Price normally takes the low liquidity, these low time frame lows, then go up. Show us some way to go up. Okay, so market open. It was fairly a fair value gap, a small fair value gap with break of structure to upside, break of structure of this high. And what we could do, we could put a market order to here, or we could wait to see if there is any law of draw on liquidity like this low. We could wait. So what happened next? The price came down to take this low, and if you go to 1 minute, so it took this low, then break of structure to upside. See, and all the way here. So we could enter on this reaction. I always says this is the pressure releasing candle. You see, this is the pressure releasing candle. If it's normally, kind of once we thinking these are the reacting area, short time frame, what we call short time frame POIs. Like this is short time frame liquidity. So once the price reaches the a candle shows something like this. It's a pressure relief. That means it's already reacting. So normally I ended on this candle. But what happened here today, because I'm pretty confident was about this low and this small fair value gap. It's a fairly fair value gap. So what I did when the price, I put a market order here, and this was my stop loss. This was here. Here was my stop loss. My take profit was the high, 4 hourly high. No, this is this the 4 hourly high? Yep, yep, that was the 4 hourly high. Okay, the other game plan. If there were no any news today, so what would be the course market would be moving? It would be the what we call the internal factor. What is internal factor? Factors is liquidity. Like if there were no news today, then I'm happy to take a shot because even you see this all liquidity, this is high time frame liquidity. Also, this is London high. So what happened? Price take that and reacted even with a fair value gap here. But I would enter here if my bias was for short, and I would enter here because this is a pressure relief candle. If we go to 1 minute candle, you can see this would be pressure relief candle. See, reacting here. So I could enter here, plus my take profit would be this London loss. If it was like non-news day, because then the market always goes for the liquidity. There is a lot of liquidity you can see here. See, so market would take that. But it is a news day, and what's moving the market is news. News moving the market. So that's how I make my bias. I always think about what is gonna move the market. If it is liquidity, I always think about where the high time frame liquidities are like, and if the price is here and high time frame liquidity here and one is here, so I always looking if the price want to go down, normally what happen, it will take this high, then will go down, or if the price want to go up, normally it's come down and take the liquidity and go up. So that's my non-news or non-external influence market days. My bias, I will make my bias on the liquidity. If there is news, this would be my way to make my bias and act accordingly. So before entering to the trade, what normally I'm looking for this so small time frame liquidity grab, because if we see this is the 8:30 candle, and see the candle 1 minute candle already reacted, and with the fair value gap the price already came to the fair value gap and reacted. So this is stop loss area. Many retail people will paint their stop here. So there is a high chance price could come and take this, but it never came to this point. But it took all these stops and went up. So always before entering into the trade, it's better to ensure that the small time frame liquidity is grabbed and is protected. Kind of, in this fair value gap is reacted. So there is a high. There is a very less chance price go below this point. And if we see is reacted on this loss, so there is a very rare, and also there is a fair value gap, so there is a very less chance price go beyond this point if our bias is on, on the basis of our information. And if our bias is correct, most of the time the trade would be in a profitable way. And what is for my today's trade? Today there is not much news. I checked already. There is not much news. So what would? Okay. That's for today. I will see you later.